Hi, I'm Kerry Good, and today I'll explore how generative AI transforms risk and opportunity assessment in financial services. I'll focus on two critical areas: AI based credit scoring and AI powered fraud detection. We'll examine their opportunities, risks, and actionable recommendations to improve fairness, transparency, and resilience. Generative AI is rapidly changing the financial industry. Banks and fintechs are using AI to automate decision making, predict trends, and manage risks more efficiently than ever before. These tools can analyze massive amounts of structured and unstructured data in real time, leading to smarter, faster, and more personalized financial services. In this presentation, I'll focus on two major applications: AI based credit scoring, which is expanding access to credit, and AI powered fraud detection, which is making transactions safer. While these innovations bring major benefits, they also introduce new challenges such as bias, lack of transparency, and vulnerability to sophisticated attacks. Balancing these opportunities and risks is essential for ethical, secure, and sustainable financial operations. We'll explore how generative AI is used to create value, the main risks involved, and recommendations for building trustworthy AI driven systems. The themes throughout this presentation are opportunities, risks, and recommendations for improvement. Generative AI is creating major opportunities in credit scoring, especially for people who have traditionally been underserved by the financial system. Companies like Upstart and Zest AI are leading the way by using alternative data sources to evaluate creditworthiness instead of relying solely on credit history and FICO scores. These AI models analyze factors such as a person's education, employment history, rent payments, and even spending patterns. This broader view allows lenders to make more informed decisions and helps open the door for applicants who might not have a long credit history but are still creditworthy. For example, Upstart's AI driven platform evaluates over 1,600 variables for each applicant. As a result, Upstart has been able to approve 44% more borrowers at 36% lower annual percentage rates compared to traditional models, making credit more accessible and affordable for many people. Similarly, Zest AI's credit models have increased loan approvals for Black and Hispanic applicants by 40 to 49% without increasing risk, helping to reduce long-standing disparities in financial access. These advances mean that generative AI is not just making credit scoring faster and more efficient, it's also making it fairer and more inclusive. By leveraging a wider range of data, financial institutions can responsibly expand credit access, support economic mobility, and reach new market segments that were previously overlooked. These advances mean more people can access fair credit, helping to close gaps for underserved populations. However, along with opportunities, there are significant risks with AI credit scoring systems. First risk is bias amplification. If AI models are trained on biased historical data, they can reinforce existing inequalities such as denying loans to marginalized groups or offering lower credit limits to women. A second risk is a lack of transparency. Many AI models are black boxes, making it hard to explain decisions to customers or regulators, which can erode trust and complicate compliance. To address these issues, I recommend adopting fairness aware algorithms such as the BRIO framework to identify and reduce bias in training data. Lenders should also provide plain language explanations for credit decisions as recommended by the U.S. Treasury. Finally, collaborating with regulators and aligning with frameworks like the EU's AI Act can help ensure ethical AI use. AI is also revolutionizing fraud detection. Companies like PayPal and Revolut use AI to analyze real time transaction patterns, reducing false positives and blocking suspicious payments before they go through. For instance, PayPal's AI assigns risk scores to transactions, contextualizing user behavior to minimize disruptions for legitimate customers. Revolut's scam detection system uses machine learning to block suspicious payments, resulting in a 30% reduction in fraud losses. These advances not only protect customers, but they also enhance trust and operational efficiency. But fraud detection with AI isn't foolproof. Fraudsters are getting smarter, using AI to mimic legitimate behavior and create synthetic identities to bypass detection. There's also a risk of over relying on automation, which may miss complex or unusual fraud patterns that require human judgment. To stay ahead, companies should continuously retrain their models with new fraud patterns and adversarial examples. Hybrid workflows that combine AI speed with human expertise are also essential, especially for investigating edge cases. Investing in explainable AI is key for building customer trust and meeting regulations like the GDPR. While AI brings transformative opportunities in financial services, making credit more accessible and fraud detection more effective. It also introduces complex challenges. Bias in credit scoring and vulnerabilities in fraud detection can undermine trust, fairness, and regulatory compliance. As AI systems become more embedded in financial operations, the stakes for getting it right only increase. To truly unlock AI's value, financial institutions must go beyond efficiency and innovation. They need to embed fairness, transparency, and adaptability at every stage, from data collection and model training to deployment and oversight. This means regular audits for bias, clear expectations for AI driven decisions, and ongoing collaboration between data scientists, business leaders, and regulators. Ultimately, a responsible approach to AI isn't just about reducing risk, it's about building a more inclusive, resilient, and trustworthy financial system for everyone. By proactively managing AI's risk and continuously improving these systems, financial organizations can foster long term customer trust and sustainable growth in an increasingly digital world. Thank you for listening.